Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about the federal death tax, which is more of a slang term for the inheritance tax. So I'm going to go through the most important areas of this tax and try to make it as easy as possible for you guys to understand today. So, like I said, these tax laws are very tricky and hard to understand when it comes to inheritance tax. So just follow me through the PowerPoints and I'll try to make it as simple as possible. Now you're likely to get taxed on an estate if it's handed down to you. If you're a family member, most likely you will get a tax on that and have to report it on your annual tax return. The executor or the administrator of the estate has the responsibility of filing the taxpayer's final tax return. So if you're named as the executor or administrator, you are required by law to file that person's final tax return for them. If an administrator or executor of the estate was not named, the survivor must file a tax return for the deceased. The federal inheritance tax is commonly referred to as a death tax because it is a tax that is imposed on all estate money and property after an estate owner passes away and leaves their estate or a portion of their estate to another person. A lot of people disagree with this because this property, this money has already been taxed before. So that's why you hear a lot of controversy out there. That's why people have named it the slang, the death tax. There's a lot of issues with it. The beneficiary who has the right to claim any money above $600 will have to claim this money as income on their tax return. This puts a lot of people in bad situations with their tax bill because if they weren't planning for it throughout the year, they may have a huge tax bill owed because of this. And say you received a lot of property but you didn't receive cash, you're going to have to pay tax on that property. So I've seen a lot of people that will receive, a house or a car or something like that and not be able to pay the tax bill, and they have to do a quick sale on everything to be able to just afford their tax bill. So it does get tough for some of you out here that all of a sudden come into property and then have to pay the taxes on it when you file your tax return. But you are required to report that and file it if it's above $600 in value. States that currently collect a tax on inheritance estate money or property are Connecticut, Maryland, Massachusetts, New Jersey, Nebraska, Pennsylvania, Oregon, Indiana, Kansas, Louisiana, Kentucky, and Iowa. This does change from time to time, so I'd recommend looking at whatever state you live in. Again, you can follow the PowerPoint as I go. And states often update their inheritance rates, their tax rates. Another good thing is, like I said, go to the website, look at those rates because they do change year to year normally. When an individual who has passed away leaves money to close family members, that tax rate will normally be lower than if that property is left to a friend or distant family member because there's specific rules when you receive this property based on who you are. And this applies to the states. Most states consider a close family member to be a mother, father, brother, sister, daughter, son, or spouse. So just look at what state you live in and go to that site and see what that rate is going to be for you. So I'm going to take you to our website real quick. This is HarborFinancialOnline.com. This is our site. We offer a free online calculator and you can prepare your return through our site here. And we have a page just directed towards the inheritance tax, which I want to take you to. So we have a lot of pages here, like I said, that are just directed towards that area of tax. I'm trying to find an area I want to highlight for you guys that I already didn't cover. There are specific forms when you report the property and money you received. So if you prepare the return directly online, it's automatically going to bring in these forms and fill out the forms for you. It's just going to be simple, quick questions you enter. It'll populate these forms, and you can file it all electronically, which is why I always recommend doing the return online if you can. It's going to run through an error check, and most likely you haven't attached this form before. It's going to run through an error check of that form and catch any problems that you might have put in there. So again, harborfinancialonline.com is where you can check out this page and do the online estimator and prepare the return. I appreciate you watching the video. I hope you check out some of our other videos at YouTube. We have plenty more. All you have to do is put in harborfinancialonline.com and you'll see well over 100 videos there. We're always adding new ones. And thank you for watching the video today.